Hello and welcome to this basic training with David Allen Capital. My name is David Rutz. I'm the founder of DAC, and I'm glad to have you part of the team. I want to welcome you aboard. Not only are we glad to have you part of our agent team, you're part of a winning team. Our process is very simple. Our loans are simple, and this industry is a simple industry to learn. So if you don't have experience, it's okay. Just watch this training completely through. Rewatch it again and again until you get it all. This is a training under an hour long. You can stop it, pause it, rewind it, etc. And then just get out there and bust your tail and help some clients, and of course you'll get paid. What we're going to cover in this training is information about our company, information about our loans, how to go out and attract clients, our process, whether you're bird dogging or hand holding, and which one you want to pursue up front based on your time availability and experience. We'll go through the application process all the way through to funding. We'll even talk about renewals and how you can get paid off clients returning again and again and again to get additional funds. So let's get started. About David Allen Capital. Number one, we're a company that was started in 2015 in Michigan. I've got over 2 decades of direct sales experience helping independent agents all over North America and international to build businesses from their homes. So this was designed to help you to be able to be an independent agent from your home. In 2016, we were acquired by a large direct sales company called Longevity International, publicly traded company. Their stock symbol is YGYI, and that gives us more strength, more funding, more ability to bring you an even stronger independent agent opportunity. We're basically an independent sales organization for all the top business lenders in our space and advanced companies. So what we do is we represent all of the best so that we can represent our clients best. See, when a client comes to us or comes to you, you know that by them giving you one application package, you can get them an answer from all of these different clients. You'll get them the best deal so they don't have to go over and over to all the different ones to see which one's best for them. We can get them an answer quickly. All of our lenders give an answer within one business day, in a funding within 1 week. So they come to us, we take care of them and give them the best offer. That's your client I'm talking about. We take care of them with the best offer. You've heard of On Deck Lending maybe, or Can Capital. These are some of the larger ones that advertise a lot. We represent them both. Why would one go to them directly when it may not be the best offer for the client? So we will get it to them, those lenders, and many other lenders, and make sure we're bringing the best product to your client. So about our loans and our advances. First of all, they're all simple and fast funds. Our lenders want to lend to business owners. This is actually all they do, is lend to small business owners. They understand business owners sometimes have credit issues. So they value cash flow of the business, revenue being produced by the business, not profitability, cash flow. That means sales. How much sales are coming in every month and how frequently are those sales coming in monthly? That's what they love to see most. They value that over credit score. All of our loans are generally short-term loans, 3 to 24 months. And actually most of them are like 6 to 15 months. But 3 to 24 months are our terms. Our loans vary in size from $10,000 all the way up to $500,000. Sometimes a loan will be declined, but maybe they'll offer them an $8,000 or $7,000 loan. So sometimes it'll be lower than 10, but we don't advertise that. And we don't advertise above $500,000 either, although sometimes a client can get approved for more than $500,000. The way the approval amount is determined is generally, it's about what they're doing in monthly sales. So if a company's doing about $40,000 per month in sales, they can generally get a quick $40,000 short-term loan. Sometimes it's less, sometimes it's more, but that gives you an idea. If they're doing $100,000 a month in sales, they can generally get a $100,000 loan. They're not going to get a $500,000 loan when they're doing $30,000 a month in sales. It's not going to happen. These aren't mortgages. These aren't 30-year loans, etc. These are all short-term repayments. A couple more things. Our application process is simple. It's a one-page application. There's minimal documentation required from our lenders. I mean, we're not talking about cash flow statements and income statements and equity statements of the owners. None of this stuff's required. These aren't 3-month loan processes like if they go to their big institutional hard money lenders. These are approved in a day, simple documentation. All the payments are fixed, interest and fixed payments. There's no collateral required, just a personal guarantee of the owners, which is the standard in anything a business owner does, whether they're signing a lease, buying a car, getting a credit card on their company for their company name, anything a company owner has to do for their company, they're always personally guaranteeing it. So that's not a surprise to anybody. Okay, a couple other things. Our pricing on our loan. We don't like to talk rates. I'm going to repeat that. We do not like to talk about rates. You don't want to talk about rates. If you're asked rates, and we'll go through this a little later in the training, but steer them away from rates and talk price. Why do we say that? Because everyone has a different definition of rates. Why, are we talking about, when someone says, what are the rates? Are they talking about annual rate? Are they talking about total rate that they paid over the life of the loan? Are they talking about compounded interest rates? Are they talking about simple interest rates, daily compounding rates, monthly compounding rate? There's so many definitions of what a rate is. It's like, do you have an apple? Well, what kind of apple? Are you talking about a computer or a fruit? And if it's a fruit, are you talking about a green apple, red apple, Macintosh? There's so many different definitions of apple that we just say, when it comes to rates, don't talk rates, talk price. That's what business owners understand. This is what our pricing generally is. Generally, they'll pay 1.2 to 1.3 times the loan amount for the term of the loan. Example, if they borrow $10,000, they're going to pay back $12,000 to $13,000 total. Their total repayment will be $12,000 to $13,000. So they would have paid $2,000 to $3,000 in interest in this example. Now this is general. We have some that are lower than 1.2 and many that are above 1.3, depending upon things. See, if they're a little higher risk, it's usually 1.3 to 1.4 times what they borrow. So if they borrow $10,000, they're going to pay back $130,000 or $140,000. Right? Makes sense? And the highest risks are actually 1.4 to 1.5 times the payment. That's if they already have loans like ours and they're taking a second or a third position. Or maybe they've got poor cash flow or poor NSFs or daily balance is low, things that cause it to be a highest risk, they'd be a higher amount. Now, believe it or not, that's still a good price for businesses because most entrepreneurs can do a lot more with the money than the interest cost. So if you can get a patio as an example for your restaurant, it's going to cost you $40,000 to build this new patio and put in new tables and chairs and new placemats and new silverware, etc., glasses to expand. Let's say it's going to cost you $40,000. And let's say you're at the highest risk of 1.5. That $40,000 loan, you're going to have to repay $60,000. So $40,000, repay $60,000, even at the worst case. So it costs you $20,000 in interest. But if that patio is going to generate an additional $30,000 a month in sales, and you're going to bring in $360,000 in extra sales this year, then you don't care that it costs you $20,000 in interest to have the money to do that expansion, right? So even at the highest risk, it still makes a lot of sense for a lot of business owners, depending upon what they're doing with the money. These are not mortgages where you're told you're going to pay 2.5%, 3%. All right, which by the way is deceiving because you end up paying 200 to 300 times, 2 to 2.3, 2.4 times what you borrow. You borrow $100,000, you end up paying $350,000 back. It's a lot more than 2%. See, that's deceiving. So we like to talk price. And you'll see at the worst case, it's going to be 1.5 times what they borrow. At the best, it's going to be about 1.2, sometimes a little lower than 1.2. All the interest they pay is tax deductible. So in that example that you see there, that they're paying 10, they borrow 10 and they're paying 12 to 13, that 2 to 3,000 in interest would be tax deductible off their income taxes, which is great. There are origination fees in our loans. We don't charge them. We don't charge application fees, none of that. Origination fees are charged by the lenders. It's not in every case. Some of our lenders don't charge an origination fee. Some of them charge an origination fee of up to 2.5%. Now, when we charge an origination fee or when our lender does, they actually deduct it from the loan. So it's not a check that someone has to show up to closing with. There's never money at closing, okay? In fact, closing is done from their home or their computer or their office. They don't ever go anywhere. It's all done electronically. We'll go through that later in the training. But basically, let's say you had a $100,000 loan and you're paying $2,500 in fees. They would just wire you $97,500. So they deduct the $2,500 from the original wire to you, all right? Some origination fees are a lot more. The highest risk can pay up to 10% origination fee. Again, that's deducted from the loan. So if they borrow $10,000, they may pay $1,000 in fees to get that $10,000, okay? And they'd end up having $9,000 wired to them. Again, depending upon what they're doing with that money, they don't care. And this is only in the highest risk situations. Rarely do we see it that high. Just letting you know it could be that high in some cases. All right, repayment terms. Our terms are, again, generally between 6 and 15 months, but it's between 3 and 24, but it's generally 6 to 15. The client does not choose it, the lender does. The lender gives offers. Now, the lender may give some choices. They may say, would you like $50,000 over 6 months, or would you prefer $70,000 over 9 months, or $100,000 over 15 months? So they may give options, but the client themselves does not say, hey, I want a 24-month loan and I want $100,000, give it to me. It doesn't work that way. We give them the best offer we can, and they may have some options to choose from. Usually, we just present the best option to them. The terms, again, could be 3 to 24 months, but rarely. All our payments are what we call daily micropayments. So rather than having a monthly payment, let's say it's a $10,000 monthly payment. Rather than paying $10,000 per month and the client or the lender hoping the client has that money to pay it, which increases the default rate because many times the business owner won't have the cash flow management to have that $10,000 sitting in a bank to make the payment. Rather than doing that, because these are collateral-free loans and they don't want them to go into default, they want these loans to be paid off. It's hard to collect from someone when you don't have any collateral, right? So they want loans that a client can afford, and they also want low default rates. So they came up with daily micropayments where what happens is every day they take a small fraction of that monthly payment out. So there's 20 banking days a month. So 20 days a month, they take a small payment out. So instead of paying, let's say, $1,000 a month, maybe you're going to pay $50 a day. $50 a day times 20 days is $1,000, and you've paid that $1,000 payment, but it only costs you $50 a day, and you don't see that. Your client doesn't see that coming out of their bank because they're doing sales every day. So obviously they see it, but they don't feel any pain because every day they're doing a little bit of sales. So they pay a little bit, but they're also increasing a little bit in sales. All right, so that's daily micropayments. Our clients actually love it once they experience it. Sometimes it's a sales objection we have to overcome because they're not used to such a thing, and they think it may scare them a little bit. But we will teach you how to overcome that later in the training here. A decision in 1 day, funding in under 5. Usually funding is 24 hours to 3 days after they say yes, but sometimes it's up to 5. We like to say decision in 1 day, funding in under 5, to underpromise and overdeliver. We're not going to say funding in a day and then it take 3 days and have an upset client. All right? Renewals, once they're paid off 50%, once the loan's paid off 50%, they become eligible for renewals, and they can take the same loan out, maybe more, maybe a little bit less, depending upon what's happened in their business, but they can take an additional loan out at that time, and you get paid on the additional money that they get. So it's pretty darn cool. So let me give you, again, the term example. Let's say someone borrowed $50,000 with a repayment of $63,000 over 9 months. This is exactly how we present it to them. We'll say we can get you $50,000. You're going to repay $63,000 over 9 months, and that's at a 1.2x factor. Your daily payment will be $350 a day taken out on banking days for the next 9 months. And after 9 months, you'll have paid off the $63,000. Isn't that cool? Where we come up with that daily payment is $63,000 total price divided by 180 payments, because there's 20 payments per month. 9 months, 20 payments, 180 payments total. That comes out to that $350 a day. Now, again, they are not going to notice that $350 coming out in any pain because they're doing $50,000 a month in sales, or they wouldn't have got approved for $50,000. So they're doing $50,000 a month in sales. That means they're doing almost $2,000 a day in sales. They don't mind paying $350 of that $2,000 out back in a payment because they got all that extra cash to now go grow their business with. So that's why daily payments are so enticing to people. Rather than having to pay $7,000 a month, it'd be $350 a day as an example. All right. Again, that $13,000 in interest would be completely tax deductible. So why do these loans make sense to our clients? Well, first of all, we are funding bankable and unbankable clients. What does that mean? Bankable means they can get approved at their local big bank, Chase, Bank of America, Citibank, etc., Comerica. First of all, those lenders stop lending at anything under $250,000. It's not worth their time, their aggravation, their underwriting, their compliance department, all the expenses they put into looking at loans and underwriting them, the months of time and eyeballs looking at that, the salary of those underwriters. It's just not worth their time. So they don't approve loans that low. They defer you elsewhere. And if you can get approved for a loan, only about 20% can get approved, and it takes them months upon months, literally 3, 4, 6 months to get approved. Well, sometimes a business owner doesn't have that time. So if someone's unbankable or bankable, we can get them a loan. And if it's a time-sensitive opportunity, they can't get a loan at their current bank, time-sensitive. It just doesn't exist. We're the only sources. They're called soft money loans. We represent all the best soft money lenders who can get them a loan answer in a day. We represent all the best. So we become the best source because we represent all of them. So if they're time sensitive, we're the best source. If the company needs to get through a current pinch they're in, we're a great source. We can get them money quick. Other ideas, as we talked about before, expansion, or how about inventory volume discounts? We just had a client get a $250,000 loan from us. They're a cardboard company. They wanted to buy more cardboard. They're a box company. They wanted to buy higher quantities of cardboard. If they upped their purchase by $250,000, it was going to save them significantly. So now they're paying in interest $50,000 on that $250,000, but they're saving a lot more than $50,000 on their purchase. So to them, it was like, I can get $250,000 from you in a week. I can buy all my cardboard and save more than $50,000. I don't mind paying $50,000 in interest to save $50,000 or more, right? So inventory discounts is a huge reason people like to get loans from us. Facility or business expansion, like I talked about on that patio or a hair salon, or what about marketing? What if someone wants to add an online website to sell products, not just at their local retail store? You got a local shoe company that wants to start selling shoes online, or a local restaurant wants to start doing marketing online and bring clients in from a little further away. So advertising, radio, TV, etc. Those things, they don't provide financing. You're not going to get the local cable channel to give you financing to run ads. What if you want to run a Google ad campaign and you want to put $50,000 into Google advertising and you don't have it, but you know it'll generate $200,000-300,000 in extra sales? Then you get $50,000 from us. You run the advertising, you bring in the $200,000-300,000, and you pay the $10,000 in interest. It's not a big deal, right? How about hiring staff or growing facilities? What about if you have to pay your taxes and you're in trouble and you got to get your taxes paid? That's another financial pinch. These are just some of the reasons our loans make sense to clients. All right? Simple and fast for the bankable and unbankable. What are the eligibility requirements? Who can qualify? Most business owners. That's the answer. As long as they're doing $10,000 a month in sales. These are small businesses, $10,000 per month in sales or more. Again, their approval amount is generally what they're doing in sales. So this would start to qualify you for about a $10,000 loan, as you can see. You got to be in business at least 4 months. 1 year is preferred. We don't do any startup loans. Must be in business 4 months. We need 3 deposits per month minimum. Frequency of deposits, 3 per month going into that bank. 10 is preferred. 10 or more is preferred. What do we mean by frequency of deposits? How many times are they depositing sales into their bank account? Now, these are sales deposits, not a loan from a friend got deposited or a transfer from a savings account got deposited. No, we're talking sales deposits. They want to see at least 4 or more deposits from sales, so 1 a week basically. 10 or more is preferred. Now, when a company accepts credit cards, a hair salon accepting credit cards or a restaurant, etc., there's sales going in every day. Every banking day, deposits are going in because Visa, MasterCard deposits every single day. So that's why those companies are so strongly favored by our lenders. Okay, if they're accepting credit cards and doing daily deposits, it becomes very predictable, their revenue. So they love seeing that. They want to see minimal NSFs or bounce checks. They got to be under 3 a month. If they're doing 4 or 5 bounce checks, they're not eligible. They will not get approved. Just not going to happen. All right. So they're not eligible. If they're not doing $10,000, they're not eligible. Well, David, I've got someone doing $7,000 a month. They're not eligible. Don't apply. They will not. We won't even submit it to the banks. Our banks trust us to look through these packages before we submit them to them because we're wasting their time if we haven't met their eligibility requirements. So we just kick them back to you. So don't even send them to us because we're just going to kick them back to you. All right. You may not know how many NSFs they have, especially if you're bird dogging, which we'll talk about later. But if you know they've got 4, 5, 6 NSFs, don't even submit it. Personal FICO score 500 or more. There's no way for you to know this. You just want to know this so when you're educating customers, if they ask about credit, most business owners, even if they have bankruptcies or liens, have a 500 credit score or higher. Another thing that's considered is your average daily balance in the bank. So if someone's near zero all the time, or $100 or $200 average balance, they're probably not going to get approved. They like to see $1,000 or more average daily balance. Now, if a company's doing $1,000 a day, their average daily balance is a lot more than $1,000. But so usually what they're doing in sales a day is about half of what their average daily balance is. So if they're doing $10,000 a month, usually their average daily balance is about $1,000, $700 to $1,000. All right, so that's another influencing factor. You don't necessarily have to check this, but if you happen to see their bank statements and you see their average daily balance is negative or $20, don't be surprised if they get turned down. All right, required documents we need. Look how simple this is. All we need is a one-page paper application. Know this, the pre-qualification form on our website is not an application. That's just more of an eligibility form. It really goes through what we talked about on the last screen. It asks them all those questions to see if they're eligible, and if so, we let them know they're eligible. But once they're eligible, they do need to fill out this paper application. It's one page. They need to fill out all fields. Just remember that in case you accept their application. If there's fields blank, go back to them, get them filled out. If you submit it to us, we just got to send it back to you. 3 months bank statements for their checking account, all pages, not just the front page, all pages. We're not talking about bank transcripts that they can print offline of their checking, their last few checks or last 30 days of checks. We're talking about the actual bank statement that's mailed to their office. Most people get what they call e-statements. E-statements are different than transcripts. E-statements look exactly like the statement that's mailed to their office. We want their e-statements. They can go online and get them. They're in PDF form already. Get their last 3 months e-statements for each bank account that their sales are deposited in, or each bank account reflected on their account. So if you get 3 months checking account statements and we look at those statements and we see deposits or transfers in or out of another bank account that company owns, we're going to ask for 3 months of those bank statements too. So just know going in, we need 3 months bank statements for each bank they use or are reflected on that checking account. What I mean by or reflected, transfers in or out. They want to see where that money's going. The lenders do. Okay, because of course that becomes a risk to them if that money's going to a personal savings account or something, because that person could take the money out of the business at any time. So they just want to see where all the money's going. It's rare that we see that, but this is training, so I want you to know 3 months bank statements for all accounts that are reflected on their checking account. Any accounts transferred in or out. And again, it's all pages. Also, 3 months merchant processing statements. If they accept Visa, MasterCard, we need 3 months merchant processing statements. We need their last year's business taxes, the last filed year. If their last filed year was a year and a half ago because they've got an extension, then we get the old taxes, but we need to see a copy of the extension, all right? We also need a driver's license of the owner and voided check of the business account that you was submitted up above. Voided check from that. That's where we wire the money into or deposit the loan money into and take the payment out of. So we need a copy of that voided check. Okay, so we've talked about David Allen Capital. We've talked about the loans, kind of where they fit, and we've talked about the eligibility requirements, and here's the required documents. Pretty simple. Now let's look at the sales process. Again, you've heard us mention bird dogging. That's when you contact someone and you invite them to look at the DAC website, but at that point you pretty much become hands-off. Maybe you don't feel experienced, or you just don't have the time to take and hold the hand of that client right now. So you invite them to DAC. You tell them to fill out the pre-qualification form that they can get to from our website. The client completes that pre-qualification form and they enter your name as the referring agent in that pre-qualifying form and your agent ID. You want to make sure you share that with them. It's on your business cards, it's on, etc. Make sure they have that so that you get credit. Now we always verify who the person is. We will always find out if they don't enter your name. We're going to find out who referred them, but in case they don't know, or in case you are just advertising, or you gave them a name but you didn't give them your card, they may not remember your name. So always give them your card with a number. Remind them it's important that they enter your name and ID in the pre-qualification form. If they are eligible, our internal client support rep, that's what CSR stands for, will contact that client and let them know, hey, you're eligible. Congratulations. We think we can get you the loan amount you're looking for. Here are the required documents we need. It's an email that goes out to them. We also inform you that you have a potential client. So you now know, oh, I've got a client who filled out the pre-qualification form. And we'll talk about basically what to do, but we encourage you to reach out to them and congratulate them and encourage they get the supporting docs in right away. We find that several people who fill out a pre-qualification form who are you're bird dogging with, they never even open our email to them saying congratulations, here's the docs we need. So we encourage you to reach out to them and let them know, hey, did you get that email? Do you have those docs? Is there anything I can help you with? So we encourage you follow up with them to help improve your closing rate. Again, you're getting a significant commission on this. In fact, a lot more than the CSR person is who's going to do most of the work from here forward. We do our best to get a completed package from them. Like I just said, you can help by following up with them. We then get that completed package. We submit it to all of our lenders. All right. We then get an approval answer or a decline, but it's usually an approval. If they're eligible, most times we get an approval. 80% of the time. There are 20% of the time where they're declined, especially if what they put in their pre-qualification form isn't the reality. They fabricate some things sometimes. But if the lender approves them, we present the best offers to the client because you're bird dogging. We don't ask you to present it. We present it to the client on your behalf. Okay, your internal client support person does. If the client accepts, we set up a closing with the client. We notify you that they've accepted the amount. And then the funding happens and you get a commission statement sent to you and you get paid. So it's real simple. This is bird dogging. You're really just an affiliate. You're just really attracting and referring people to David Allen Capital. Maybe following up with them and saying, hey, did you get that pre-qualification congratulatory email? Yeah, get those docs in. If there's anything I can help you with, let me know. So that's bird dogging. Now, we love people who do bird dogging because we love you referring clients to us. That internal client support rep is going to go out of their way to help them. They're on commission, so they're going to go out of their way to help. They're making a lot less commission than you are, though, even though you're bird dogging. So that's why we say you can help. Don't be surprised if the CSR reaches out to you and says, hey, Joe, I've been trying to get a hold of your client. They're not responsive. Can you help me? Go back to them. Again, you stand to make a huge commission. So I'm just letting you know I'm trying to get your package, but they're not responsive. So help me out. That's bird dogging. All right. Hand-holding is when you don't rely on our internal client support rep. You want to be more of a independent broker, independent agent who you want to get referrals eventually. You want to be providing professional service to your client. You want to be their go-to person, which we encourage you to get to your education and time freedom so that you can do that because it helps generate a lot more renewals and a lot more referrals. So you end up getting paid more. You do more work, but you end up getting paid more over time. Now, we pay the same commission up front to you as as a bird dogger or hand-holding. We pay you the same commission, but you're going to get more referrals and more leads and more renewals if you're hand-holding. That's what we've seen, so we encourage you to do that. So now you contact them, but rather than having them fill out the pre-qualification form, you determine their eligibility via a conversation. We'll go through how to do that in a moment. You then get their application by forwarding a copy of the application to them via email, along with the checklist of the needed documents. So the same things that our CSR puts in the email if you're bird dogging and sends out, you send an email to your client then, or you hand it to them. But we encourage, many times you'll be able to just email them the document. That way it's in electronic form already. They then complete the application and submit all the documents to you. So you get the completed package, you look at it, you make sure everything's complete in electronic form. If they're missing bank statements, you say, hey, wait a minute, you didn't send me 3 months bank statements, or you didn't send me a copy of your driver's license yet, etc. They get you all of those. They email all of those to you in PDF form. Make sure you're using a secure email server like Google or Yahoo or one of those that has an HTTPS in the address so that you know it's a secured server. Then you submit that package via email to our submissions department at submissions@davidallencapital.com. Okay, we'll go through this in a moment, more details on that. We then submit it to our lenders. We then get an approval. We present the offer to you. Sometimes you say, hey, do you mind presenting it to the client with me on the phone? Sometimes until you're more experienced, you may not want to present the offer yet to the client. So maybe our client support rep and you will present it to the client. All right. If the client accepts the offer, we set up the closing, funding happens, you get a commission statement, and you get paid. All right. And then, of course, because you've been hand-holding, you request referrals from them. We encourage that. Even if you're bird dogging, but you're going to get a lot more, they're going to appreciate you more. You've had more of a relationship because you're hand-holding to get referrals. Okay. So now, who's your target market, whether you're bird dogging or hand-holding? Let's talk about it. Start with business owners you know. We always encourage this. And what we mean is get in the consciousness of the business owners that you know, that you now represent simple and fast loans, and you can help them. If you know a business owner, they have two things on their mind sometimes: how to earn more money or how to get more money so they can earn more money or stay in business or get through a pinch. That's their biggest thing. They're trying to make a difference in the world. They're trying to bring a good quality service. Maybe they're trying to make an impact. But businesses are fueled. Oxygen is called money in businesses. It's all fueled from new sales or access to money to generate new sales, right? Or new ideas, etc. So get in their mind that, hey, by the way, Bill, your pizza restaurant, I love the fact that you're an entrepreneur. I just want you to know I'm now an independent agent. I represent lenders who love to loan to business owners. Small, simple, and fast loans. So if you're ever looking for a quick loan, maybe to expand or to get through a pinch, I want you to know I'm doing that now. I'm serious about it. I'd love to help you. If you ever need anything, you let me know. That's getting in their consciousness. Now they know. If you started selling homes, you'd want everyone you know you're a real estate agent, so that if they ever choose to sell a home, they know that you are interested. This is warm market. These are people you know. Make a list of every business owner you know, including your doctor, your dentist. You'd be surprised. Doctors are one of our highest categories of people who are taking loans from us. Dentists, chiropractors, they love taking loans from us. All right? I don't know why, but they fit. Our lenders love to lend to them, and we get a lot of them coming to us for loans. So contact your doctor. Let them know you're a small business loan representative now, and you'd love to help them. So get in their consciousness. That's what we mean. Just speak to them. Send them a text, send them an email, but speaking to them is what we recommend. Then, after you've done that, which will usually take you a couple weeks to get through, and you probably get a couple loans just by talking to business owners you know, then you go to businesses where you're currently spending money. So maybe you don't know the owner of the local sushi restaurant yet, but you eat there 3 times a month. Next time you go in there, as you're paying your bill, say, hey, is the owner in? Can I talk to him or her real quick? They come up front. You say, hey, Bill. Hey, Lisa. Hi, my name is David. I just want to introduce myself. And we'll go through this. We got a training script in a moment. I just want to introduce myself. I love eating here. Love what you're doing. I just want you to know I represent small business lenders. I'm an independent agent. Our lenders love to loan to business owners like yourself, so you got a great business. If you're ever looking to expand, open another location, add on, whatever, or create marketing, or if you're ever in a tight pinch and you need quick money, we have simple and fast loans, literally approved in a day, funded in under a week. So I just want you to know I'm in here all the time, but here's my card. If I can ever help you, you let me know. You're in their consciousness. When you do those 2 bullet points there, start with business owners you know, and then business owners where you're spending money, you'll probably get a few loans. I can't guarantee it. I don't know how many business owners you know. But if you really do this, your doctor, your dentist, where you shop, your buddies from school, even your friends you haven't talked to in 10 years who are business owners, you call them and say, hey, I know we haven't talked in a while. I know you're an entrepreneur. I just wanted to reach out to you because blah, 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 blah. Same story over and over. Get in their consciousness. It may not be now. My wife's first client, she talked to them in December, bird dogging, when she was getting her nails done at a salon next to Costco. She had never been in there, and she told them the same thing. Hey, is the owner in? Great. I just want to introduce myself. My husband is a small business loan broker. He's got lenders that love to loan to business owners like you. Here's his card. If you ever need money to grow, or if you ever need money to get through a pinch, here's his card. 3 months later, she called me. My wife forgot she even gave her the card until she said, yeah, your wife gave me this card when she got her nails done. I told my wife, she was blown away. My wife has now made $2,700 over 3 different loans from this woman. She got 1 loan and 2 renewals since. My wife has made $2,700 over 3 loans from handing a card and opening up into the consciousness of someone where she was spending money. Bullet point 2 there. There's another loan we just closed last week. A gentleman saw a person in a gas station that said roofing company. So he went up and introduced himself and said, "Hey, I see you own a roofing company. I just want to introduce myself. I represent small business lenders who love to loan money to entrepreneurs. If you're ever looking for money to expand or you're ever in a pinch, here's my card, call me." That bank got a loan for that client got a loan for $110,000. That rep made it over $3,400 on that loan. Not bad. So it's talking to business owners, introducing yourself, but start with business owners you know, then business owners where you're spending money, and then, of course, ask for the owner, and then cold canvassing like that gas station. What I like to do is if I go get a Starbucks coffee, and I've already done bullet point 1 and 2, then I'm cold canvassing. If I get a Starbucks coffee and there's a nail salon next door and I got a few minutes, I'll walk in there. "Hey, by the way, I just want to introduce myself. I was next door getting a coffee. We love helping nail salons out. We've got lenders who love to loan money to nail salons," which is true. If you're ever in a tight pinch or if you ever want to expand or grow, I want to give you my card, here to help you. I live locally, so I'd take good care of you. Let me know if I can help. It's cold canvassing. Of course, you can do emails, etc. Chamber of Commerce meetings in your area, groups. You could become a speaker at your Chamber of Commerce meeting. But all these things do last. If you start here, you're not going to have as much success if you start at the top. If you want to really have success, start with the top bullet points and work your way down to cold canvassing. You may say, "I don't want to yet talk to people I know." Okay, well, you shouldn't feel that way. So guess what? You can be authentic with them. You can say, "It's my first week. I'm not sure all the answers yet, but let me check. I do know this. Our lenders love to loan to business owners like you. I want you to know I'm now doing this. And I'm working with some great people who are training me. So if I can't answer your question, someone else can. I'll get you answers. Most importantly, I'll make sure I get you taken care of." That's what you can say to people you know. All right, that's your target market. So here's the contact. I've just given you examples of it. Before you start saying a word, keep this in mind. You're providing a solution. You're not selling. That business owner you know, remember I said, they got oxygen on their mind. They either need money or they want to generate more money. They're either in trouble or they want to bring in more revenue so they can expand their business even more. So you're providing them a solution to get through a pinch or to create new opportunities. They can do great things with available cash. If you said to any business owner, any pizzeria restaurant owner you know that's doing $30,000 a month, if you said to them, "Hey, Lisa, what would you do if you had an extra 30 grand right now to grow your business? What would you do?" "Oh my God, I'd open another location." "Really? Well, what if I could get you 30 grand? Would you really open?" "Yeah, heck yeah, I would. I could double my profit." "Great. I can get you 30 grand, I bet, if you're doing 30,000 a month." "What are you doing if 30? "Oh my God, I'd pay last year's taxes. They're charging me fees of this and that every single month." "I can get you 30 grand to pay your taxes from last year. It may cost you 5,000 in interest, but it's a lot better than what the IRS is charging you." Right? Where'd I come up with 5,000? 30 times 1.2 would be 36,000, 6,000 interest. So I gave it a little low number there. So that's what they can do great things, or they can get out of a jam like those taxes, or making payroll. They got to make payroll this Friday. Or how about this as an opportunity? You're a cement company. You know a buddy that owns a concrete company. And he was just given, or she was just given, a job offer to do a huge business. But that huge business pays when the job's done. And they need to bring in more staff. They got to buy all the concrete in advance. They got to bring in more molds, hire more people. And they're going to have to put 50 grand out to bring in the $200,000 job. They don't have the 50 grand to put out. If you let them know you can get them a loan, they go, I don't have to turn that job down. I'm going to call my buddy Bill, who's now a loan broker, and say, "Bill, can you get me 50 grand? Because I can get a $200,000 job if I get that 50 grand. "Well, let me see. How much you doing a month in sales?" "Doing 70,000. I bet I could get you 50. Right? Because they're doing a lot more in sales than they need in a loan. So you can help them get out of a jam. So remember this when you're making contact, that you're there to help them with a solution and even encourage them to think of solutions. Let me give you an example. Ask a question. If you had a little extra, what would you do to grow your business? If you had a little extra, what would you do with it right now? Same thing you could ask yourself. If you had 20 grand extra in your personal bank right now, what would you do? Would you invest? Would you start a business? Would you pay off debt? I don't know. If you won a lottery for 50 grand, what would you do? So same thing, you can ask business owners and you'll give them. When you're in their consciousness, they'll come up with ideas. So then get out there and use the words of work. I've already used them on this training. Just wanted to introduce myself. I represent small business lenders who like to lend to small business. Make sure you say that. Because guess what? Most banks don't, and they know that. We want to tell them up front we do. Our process is simple and fast. That's another key selling point. Approved in one day, funded this week. Our lenders value cash flow over credit score. In case you have an opportunity you want to pursue, or if you're ever in a pinch, ... I want you to know I can help you. Those are the points right there. Those are the words that work. That's what you want to say every single time. This is at the 39-minute mark of our training. That's what you want to say every single time you approach someone, whether you're your friend or a stranger. You may not say, I just want to introduce myself to your friend, but I wanted to call you, Bill, let you know I'm now a small business loan broker or loan agent, whatever you want to call yourself. I represent small business owners who love to loan to business owners like yourself. The process is simple. It's fast. They actually give approval in one day, funded in a week. They value cash flow over credit score, compromised credit, good credit. We got programs for everybody. So in case you ever have an opportunity, Bill, you want to pursue, or if you're ever in a tight pinch, I want you to know I can help you. Right there. They're either going to say, tell me more, or, hey, that's awesome. How long have you been doing that? Yeah, I'll keep it in mind. And then you could throw out the question, what would you do if you had extra money? You could ask them to get creative. We've got some tools. We've got a script. Everything I just said in bullet point is in that script right there. We call it the postcard prospecting process. And that process is available in your broker resource center, that script. We've also got business cards, postcards. The postcard is like a business card. It's got all the selling key features on the back of the card. The front of the card is little like a billboard. It would have your name and contact information right there in the training information. I'm sorry, in the contact information. All right, so you give them that. Now, if they're interested, you then, if you're doing hand holding, if they're bird dogging, you send them to your website, of course, and you have them fill out the pre-qualification form. If they're interested in your hand holding, you now want to do the pre-qualification that we talked about. Instead of relying on the pre-qualification form, you want to qualify them yourselves. And again, it's this few simple questions. If you don't know what those questions are, read the pre-qualification form or go back in the training. But you want to know how much their average monthly revenue is. So, Bill, how much are you doing in sales? Yeah, I'm interested, Dave. That's awesome. I could always use extra money. Great. Let me see if you're eligible. How much are you doing in sales? Oh, we're doing about $7,000. Oh, really? I'm sorry, bud. Our lenders, there's no collateral required. They're cash flow based. I mean, they give you an answer in a day, but they do require the lenders or the clients are doing at least $10,000 a month in sales to be eligible. So can't help you right now, but once you're doing 10 grand or more, let me know and I'd be happy to take care of you. Okay, so you would disqualify them there and let them know. If they say I'm doing $22,000 a month in sales on average, great, that's awesome. Let me ask this: how long have you been in business? Usually you know this if it's your friend, but if it's not, you'd ask them how long you've been in business. As long as it's 4 months or more, you're okay. Great. This is how you qualify number of deposits on average. This is how I like to do it anyway. It's very effective in my opinion. You want to know how many deposits they're doing. You don't say how many deposits a month. You could, but I like to say, okay, because these are cash flow based lenders, they like to see cash flow, number one, your sales, but they also like to see the frequency of deposits. The more deposits you have going in your account a month, the better off you are. So as far as number of deposits, how many times do you go to the bank to deposit money, or how many times does Visa MasterCard deposit in your bank? How many times would you say per month? Oh, well, Visa MasterCard puts it in every day. Ding, you already know they're at 20 deposits a month. Or, well, I go to the bank once a week. Okay, so that's 4 times a month. They're eligible. Oh, dude, I only have one client. I go once a month. They're not eligible. Oh, I'm sorry, Bill. You know, your trucking company, you got one account, BMW, you deliver trucks for them. You only have one deposit a month. Okay, ooh, dude, I'm so sorry. Our lenders, it's all cash flow based. Not only do they want to see a certain amount of cash flow, but they need to see a frequency of deposits. As you can imagine, if that one client went away, you'd have no revenue. So they just won't take that risk. So if you have at least 4 deposits a month, we can look at it. But, well, Dave, I get money every day. I only put it in once a month. Oh, well, then start depositing it more often and come back and see me in another month after you're doing more than 4 deposits a month. Okay, so that's how you qualify number of deposits. How about history of NSFs? Same thing. You've already told the story. These are cash flow-based loans, quick funding. So then you would just add to that. Okay, cool. You got plenty of deposits then. The only other thing I'd say is they do not like bounce checks. Do you have any history of bounce checks at all? Oh, no, I'm cool with that. Okay, great. Bob, what would you say your average daily balance is? Oh, my average daily balance? I don't know. What do you think it is? Just ballpark. Well, I don't ever think it gets below $2,000 or so, $3,000. Well, then your average daily is probably 4 or 5, but you don't ever know that it's going below 2 or 3. Yeah, it's never below 2 or 3. The average is always a lot higher than the minimum, just so you know, guys. Okay, great. Let me ask you this: how much money do you think you're looking for? Well, I don't know. It depends on what I could get qualified for. Well, you said you're doing $15,000 a month. We could probably get you about 15 grand, give or take some. Maybe a little less, maybe a little more. But based on what you said, we could probably get you about 15 grand. Oh, that is awesome. Well, if we could get you 15 grand, how quickly do you think you'd want it? I mean, is this something you'd want to move forward with or no? Well, yeah, if we can get 15 grand, there's stuff I can do with it right now. Great. Let me ask you this, Bill. What do you think you'd do with it? You have any idea now, or you're not sure? It doesn't matter. They don't care what you do with it. I'm just asking for my own good because I love seeing what business owners do and how we can help them. Oh, I'd go off and that 15 grand. I'd put 10 grand to pay my taxes. That'd be a tax-free now, debt-free with my tax. It would be awesome. I'd take the other 5 grand and put a new sign up on my pizzeria. The sign's just old, ugly. The lights are always burning out. I'd put a new sign up and pay my tax up. That's awesome. The sign will bring a new business. You won't have any interest anymore on your taxes. Good idea. Cool. All right. Then this is all we got to do. Now you explain the process real quick. Again, we can get you simple loans. You've made sure they're eligible. Now this is hand-holding. You go back and explain the process. Okay, great. These are simple loans. We'll get you an answer one day. We can fund you as fast as 3, 4, 5 days. If we get you approved, your terms are going to be between 6 and 24 months generally, but it's usually 3 to 15 months depending upon your risk level. Now, what they're going to do is they'll give you more money than what other lender. First of all, other lenders probably wouldn't even approve you if you're doing $15,000 a month, especially with what you want to do with the money. But they'll give you an approval. The way they do it is they make it painless. What they do is they deduct a small payment every day. They call it a micro payment rather than a big chunk monthly payment. All right? So all we need to do is get an application and some basic docs from you. All right, so what I'm going to do is I'm going to email you the application. It'll be a PDF. You just print it out, fill it out, scan it, send it back to me by PDF, and also a checklist of documents you're going to need. It's real simple. It's your bank statements, your driver's license, a voided check, etc. That's it. It's real simple. That's it. That's all you do. That's how you explain the process. Now, if you're with them and you happen to be with them, pull out the application, have them fill it out, great. But I don't like to do that. It makes it feel salesy. So we usually don't do that. If you feel comfortable doing it, go for it. Whatever feels comfortable for you. But you don't want to walk in with a briefcase and look like a door-to-door salesperson. That turns them off. You want to think of yourself as a consultant, helping them get a solution to generate more revenue for their company or get through a pinch. So you're getting them access to a tool called money. If you give someone free Wi-Fi, you gave them a tool to build their business. If you give them money, you're giving them a tool to build their business. Look at it that way. You're not selling them a loan. You're providing them a tool to grow. You get paid to do it, yes. The byproduct is you earn a nice check. But you're not selling, you're solving. All right? Here's the application submission process. Real simple. Make sure all the fields are filled in. Every field must be filled in. Even the financial. We can't fill anything out. They must fill it all out. They also must sign it. You must make sure 50% ownership is represented on the application. So if there's 2 owners, 50-50, both owners have to be on it. If one owner has 51%, then you're good to go. But you at least need 50% ownership on the application. If you know there's 2 owners and one has better credit than the other, enlist that one first, because they always run the credit only of the first person first. And if that's good, they go through. If it meets the 500 FICO, they go. If it's 600 or more, they can get even better loans. So if someone's at 650 or more, we can get them real good terms if everything else looks good. If they're below 650, they fall into the higher risk. If they're down near 500, they're at our highest risk. So always list the best credit person first if they know. Also then scan and email the application and the rest of the package, everything you're going to submit to submissions at davidallencapital.com. And of course, you're going to have the application, 3 months bank statements, all pages. That's usually, each month is usually its own PDF. 3 months merchant processing statements, as we talked about, if they accept credit card. Again, each month is usually its own PDF. Driver's license. Voided check, sometimes that's you could make that in one scan. Last year's business taxes, again, all pages. This is what we need. That composes a completed package. I will say this, if they don't have last year's business taxes yet, or it's going to take them a while, don't hold up the application for that. Send it in without it. Some of our lenders will approve them without the taxes and give them their terms, but may need the taxes before closing. So sometimes, though, the taxes don't reflect what they say. They may say they own 80%, but the taxes show they only owe 20%. So sometimes getting the taxes late will kill a deal because we'll see the ownership's different. So we'd like to see them up front. Some lenders never even ask for the taxes. If they can get approved, if they got good credit, they usually won't even be asked for their taxes. But we like to get it all up front. But if that's holding up the deal, don't wait. All the other documents are required, but the taxes aren't from some of our lenders or aren't at least to get an approval. So don't hold up a package for it, but just ask for them up front, request them. But if they say, oh, it's going to take a while, tell them, send me everything but the taxes and get me the taxes as soon as you can. And we'll start working the package without the taxes. All right, now, this is for hand holding again. This is what our client support reps do. You're going to follow up with them once they've been approved or not approved or if the terms are different. So let's say they're approved. You would follow up. Hey, Bill, I just wanted to reach out to you, touch base, confirm a couple things with you. Your deal's almost done. It's being processed. You said, again, the money's going to be used to pay the taxes and do that. That's awesome. And this is going to help you to make a new sign, etc. That's awesome. If you don't get the money, what's going to happen? What are you going to do? Well, I'll keep paying the taxes, all that, blah, blah, blah. What this is doing, guys, is it's helping to create an urgency because you don't want them thinking about this for 3 weeks. All right? It wastes your time, our time, everybody's time. Now, if they need to think about it, they can think about it. But hopefully they didn't apply unless they are ready to proceed. That's why we ask early, are you ready to proceed? But this is a review of the return on investment. What we mean by that is the return on the benefit of having these funds. That's what we're looking at, the benefit of having the funds. So, like you said as an example, Bill, you're going to build a patio. Hello, I just want to touch base. I'm reading the first bullet point again. Confirm a few things with you. Your deal's almost done being processed. So this money, again, you said it's going to be used to build a patio and put new tables in there and everything. It's going to help you generate sales. You think it'll generate an extra 20, 30 grand a month in sales. That's awesome. So if you don't get this money, what are you going to do? Well, I won't be able to build a patio until I get bigger. Okay, cool. So we want to help you get that patio. Well, based on your credit profile, what I'm hearing back so far is, this is if you know the answer. I don't think we're going to be able to get you the whole 100K you were looking for. Move on to the next point. This is if you're conveying something the news is that it isn't great. Or I don't think we're going to be able to get you the 12-month term you were looking for or whatever it is. But since 100K might not be an option, I'm on to the option close now. If we can get you 75 to 80,000, is that something you'd still want to move forward with, or is that still something you could benefit from, or no? No, Dave, I need all 100, or I can't do this. The patio cost 100 grand. All right, I'll see if we can get it, but it's not looking like we're going to be able to. Okay, so you just find out. Get the answer, because there's a lot of work done still. So if they're not ready to proceed or not going to proceed, we want to know that, and we just stop moving forward, or at least tell the lender they can't go forward unless they get the 100 grand, and it may influence the lender. Usually it doesn't. Or hi, Bill. So it looks like there's a good chance we're going to get you all 100 grand you're looking for. If we get that approval for 100K, like we said, is that something you're ready to go on now? You want to get that money as soon as you can to get started on the patio, or no? Again, we want to create we want to remind them of the return on investment they're getting, the return on that loan, how they're going to benefit basically. What they're going to do with that money is going to generate revenue or kill a financial pinch they're in, or kill heartache. They're not sleeping at night because they're not making payroll, or they got tax liens, whatever. We're going to help get rid of all that. We want to make sure, are you ready to move now? Just so we have an idea. Okay, great. That's the first follow-up. You may even talk about that in day one with them, right, when you're getting the app. But here's the next conversation, when they're already approved and you're presenting them the terms now. Again, this is if you're presenting because you're doing hand-holding. Hey, Bill, I got great news for you. You've been approved for 100K like we thought. I know this is really going to help you build that patio you were talking about. Do you have a minute so I can explain all the terms to you now over the phone? Explain it over the phone. You don't need to say, I'm busy right now, Dave. It'll take us 30 seconds, Joe. Yeah, go ahead. And I'll email you too, but just let me tell you real quick. We have an approval for 100,000 over 12 months. The daily payment's going to be umpty-ump, and your payback is going to be 132,000 over 12 months. So you're getting 100, you're paying back 132, your daily payment's going to be this. The nice thing is If we don't need much to close, I'm sorry. If the nice thing is we don't need anything from you at this point, we've already got all your docs. But there is an additional stipulation. The Secretary of State, as an example, showed that you started the company in 2006. Your application said 2004. Did you have a change of ownership or something? They just want to see why there's a discrepancy there. Or you said you own 70%, but the Secretary of State says you only owe 30. Oh, I bought my other partner's 40% out. Okay, do you have any document that shows that? We just need to see that you own over 50%. Oh yeah, I'll send you the docs. So that would be a stipulation. Usually there's not a stipulation, but if so, you tell them now. Okay, great. I'll email over the documents you need, the closing documents. You sign them, get them back to me, and we'll get your funding process started. So you send them the closing documents. You tell us they're ready to proceed. So you would call us now and you'd say, okay, Mr. David Allen Capital or Mrs. David Allen Capital, my client does want the loan. They're ready to proceed. Great. We order the closing documents. It usually takes 1 business day, maximum 1 hour to 2 hours minimum to get the closing documents set up for your client. Okay? We then send you the closing documents. You have your client send them, get them back to us, and then the funding after the signed docs starts. That's what happens. You get the signed docs, you send them to us. Some lenders will fund immediately. There's nothing else looked at. Other lenders do what we call a final underwriting, and they may review they may request another document or two, even though they've already signed the terms, because some underwriters give I won't call it a soft approval. They give an approval, but they're trusting the information that was put in the application is accurate. They're trusting you really do own 70%. They're trusting your company really did start over 4 months ago, etc. But now they may do a final review to verify the information on the application, and they may come up with a request or two, like, we want to do a landlord verification. Or we need to see a document because the Secretary of State says you don't own as much. Or we do need to see your taxes after all. And some lenders will even do a funding call where they'll call your client and verify your client wants the loan, ask them a couple questions from their application, nothing in detail like what's your social security number or how long have you been in business and where's your address. I mean, they ask things that were put in the application. What they're doing is verifying there's a real person who owns a real business who wants a real loan because they're never going to meet these people. This is all done electronically through distance. All right, so some do some verification afterward, and we've had some loans that get declined at this point because the application wasn't accurate. All right, there was things in the application that were fabricated. So sometimes you do get a declined loan even after the signed documents because the final underwriting is looked at further. Other lenders do that all up front. They don't even offer terms unless they've already approved it, already verified everything. All right, some of them have better systems and they can verify everything in day one. Others take some half a day to approve the loan and another half a day to verify everything, but they don't verify it till the loan's been accepted by the client. So that's why it's sometimes different. We'll let you know when we present the offer to you if it's an instant funding afterward or if you should expect a 1 to 3 day delay. Then the funding happens, you get a commission statement and you get paid. Now, renewals. This is how renewals work. Renewals can increase the loan amount over time. Why? Let's say someone wants $100,000, but they're only approved for $75,000. So they take the $75,000. Once they've paid it off halfway, they can get that $75,000 loan again. Some of that will be used to pay off what they still owe, but they'll net another $30,000 or $40,000 maybe. So now they've actually gotten $115,000 from us over time. Because once a loan's paid off, they can get that same loan again, and most times they do. That's why you love short-term loans. If it's a 7-month loan, it's half paid off after 3.5 months. They may renew and take another loan. You get paid another commission. And then 3 months later, they may renew again. I love shorter-term loans because the client's getting out of the loan quick and can get into a new loan quick. And they also pay a lower price because they're keeping the money for less time. All right. And of course, once the loan is 100% paid off, the client can renew again, and they'd get the full amount. You'd get full commission then. So let me give you an example again. They borrow $100,000 and they owe $120,000 back. So they've paid off $60,000. So they've paid off half the loan, right? They still owe $60,000, but now they want to renew. So they get a new $100,000. Well, they owe $60,000, right? So of that new $100,000, they pay off the first loan with $60,000, and they would deposit $40,000 into that client's account. So now they have $40,000 new cash. They owe a new $100,000, right? You got a new $100,000 loan. They got $40,000 in cash for their bank, and their first loan's paid off. You get paid on the new 40 in this case. Now, if it's 100% paid off and they renew, then they'd get all 100 grand. Again, there's nothing to pay off. You'd get paid on all 100. So whatever their net new money is, you get paid full commission on. It's pretty darn cool. So as a summary, our loan products are from $10,000 to $500,000, sometimes more. 3 to 24 months, daily micropayments, sometimes weekly, never advertise that. We'll let you know if they're approved for that. Approved in 1 day, funded in under 5. We view credit. We value cash flow more than credit score. Warm markets where you should start, followed by business owners where you shop, followed by cold market. Hand-holding versus bird dogging, you decide. We have a simple process from app to approval to funding. Watch this again and again if you need to, right? Promote renewals. You can always get clients to earn more, and you've completed the training. That's it. I thank you for being a part of this family. I encourage you to get out there and bust your backside. It's 100% commission, but it's lucrative commission for those who treat this as a profession and take it seriously. Even if that's only 1 hour a week, introduce yourself to business owners for that 1 hour a week. We encourage hand-holding over bird dogging, but if to start you can only bird dog, then bird dog away. We're here to help you. God bless you.